Welcome to Financial Knowledge, your go-to channel for all things finance. If you're new here, don't forget to hit the subscribe button and turn on the notification bell so you never miss out on our latest videos. Today, we're diving into the basics of the stock market and how you can start investing. Whether you're a complete beginner or just looking to brush up on the fundamentals, this video is for you. Let's get started. Section 1. What is the stock market? The stock market is essentially a marketplace where stocks or shares of ownership in a company are bought and sold. It operates much like a regular market, but instead of fruits and vegetables, you're trading ownership in businesses. When you buy a stock, you become a shareholder, which means you own a part of that company. The value of your shares can go up or down depending on how well the company performs and other market factors. Section 2. Why should you invest in the stock market? So, why should you even bother investing in the stock market? Well, there are several compelling reasons. 1. Potential for high returns. First, the stock market offers the potential for high returns over the long term. Historically, it has outperformed other investment options like bonds, real estate, and savings accounts. 2. Ownership and dividends. Second, as a shareholder, you may receive dividends, which are a portion of the company's profits distributed to shareholders. 3. Liquidity. Third, stocks are highly liquid assets, meaning you can easily buy and sell them, giving you flexibility with your investments. Section 3. Types of stocks. Now let's talk about the different types of stocks you can invest in. 1. Common stocks. Common stocks are the most straightforward type of stock. When you own common stocks, you have voting rights in the company and may receive dividends. 2. Preferred stocks. Preferred stocks are a bit different. They usually don't come with voting rights, but they do offer a fixed dividend. In the event of liquidation, preferred shareholders are paid out before common shareholders. Choosing between common and preferred stocks depends on your investment goals and risk tolerance. Section 4. How to start investing. Ready to start investing? Here's a simple step-by-step guide. 1. Set financial goals. First, set clear financial goals. Are you investing for retirement, a down payment on a house, or just to grow your wealth? 2. Choose a brokerage account. Second, choose a brokerage account. There are plenty of options out there, like Zerodha, Upstocks, and Grow. Look for a platform with low fees and a user-friendly interface. 3. Research and choose stocks. Third, do your research. Look into different companies, sectors, and market trends. It's crucial to understand what you're investing in. 4. Diversify your portfolio. Fourth, diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different sectors to manage risk. 5. Monitor and adjust. Finally, monitor your investments and make adjustments as needed. The stock market can be volatile, so it's essential to stay informed. Section 5. Common mistakes to avoid. Before we wrap up, let's go over some common mistakes to avoid as a beginner investor. 1. Not doing your research. 1. Not doing enough research. Always understand the company you're investing in. 2. Overreacting to market fluctuations. 2. Overreacting to market fluctuations. It's easy to panic during a downturn, but remember, investing is a long-term game. 3. Not diversifying. 3. Not diversifying your portfolio. This increases your risk significantly. And there you have it, a basic guide to getting started with stock market investing. Remember, the key to successful investing is knowledge, patience, and a long-term perspective. If you found this video helpful, please give it a thumbs up and share it with your friends. Don't forget to subscribe for more financial tips and advice. Also, leave a comment below with any questions or topics you'd like us to cover in future videos.